Okay, it's about 12:02, so we're going to get started. Today's presentation is going to be on tax bills. This is one of my favorite topics to have a discussion about. There's so much to know, and God knows it's such a complex conversation to have. So let's get started as quickly as possible. Let's launch into it, right? First thing first, my name is Liz Warning. I'm the Director of Housing Counseling Programs here at the Lake County Housing Authority. Our offices are in Lake Zurich on Lakewood Lane. The main office is in Grays Lake, but we do have several satellite offices, including Lake Zurich, and then we're, of course, at the courts every Thursday in Waukegan. Above, you can see my contact information and how to get in touch with me. We are a HUD-approved housing counseling agency, number 80113. Housing counseling is provided for free to all residents, regardless of demographics, etc. And above, you'll see some of the counseling programs that we offer to our community neighbors. The QR code will lead you directly to the intake form if you do want to have one-on-one counseling services about this topic or any of the ones listed there. All right, let's do some housekeeping. This is a limited time workshop. We only have about an hour, so everybody's muted. If you do have a question, please put your questions in the chat. I cannot wait to answer them, but if you did want to start a conversation with your fellow participants, I only ask that we keep it civil. Taxes are a hot topic, and we are not here today to discuss who should be paying taxes, who should not be paying taxes, if some of our taxes are valid, or who is responsible in the great scheme of things for our taxes increasing, decreasing, etc., etc. That's not the conversation today. We are here just for educational purposes and to say, hey, this is how we read our bill, this is where it comes from, how do we address it, etc. So that all being said, everybody's muted. If you don't want to be on camera, turn off your cameras, because this is going on to our YouTube page. So please, 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 for your own protection, if you don't want your beautiful faces shown, even though God knows you probably look fabulous in your own space, please turn off your cameras if you don't want your face shown. Okay, there's going to be a Q&A, but again, if you have a conversation starter, if you want to put something in the chat to talk to people about, please do. So what are we going to do today? We are going to go through a couple of topics and hopefully address common obstacles to truly comprehending our tax bills, which of course just were released on the county website. So we're going to go through how you're going to read your bill, basically how to download them and read them, how your actual taxes are calculated, what exemptions, how to qualify for them, where to apply for them, how to appeal if you do need to appeal, and then of course the two biggies, which are what happens if I don't pay, which is always a hot topic, and then impacts on your mortgage if you do pay your mortgage along with property taxes and homeowners insurance every year. All right, let's launch into this. Again, I have put in the chat the link to download your own property tax bill on the county's website. What I'm going to do right now, instead of going through a bunch of these slides, as you can see there, we're going to be actually downloading the bill itself. So I'm going to open up the page right here. So, and I'm going to face my other screen, so forgive me if I don't look you right in the eye, I'm going over here. So what we're going to do is go to lakecountyil.gov, and we're going to go to, I want to pay my property tax bill. And if you scroll down, this is a great YouTube video, by the way. You scroll down to view your tax bill and payment history. It's going to populate this screen. Now there's two things you can do, and we'll do them both right here. After you've read this, because always don't agree to anything until you've read it, you're going to hit agree, and it'll provide you with this page here. Now this page allows you to enter a billing name or your address. This is more for when you're looking up a property to maybe potentially purchase it, right? And you want to see what the property tax histories are. Very wise, by the way, if you're going to be purchasing a property, please do not let somebody else pull your property taxes for that property. Please pull the taxes yourself so you can see what exemptions they get that maybe you won't, or what the actual detailed history of it, if it's accurate as far as the assessments go, et cetera, et cetera. So this page is more along that line, right? So maybe you know the PIN that you got from the MLS, or you know the property address, you can plug it right in, right? I prefer a different way because I just do and that is to go to the search options and map search. I like this. Our county has a really lovely interactive GIS system that I think is horribly underutilized. Please avail yourself of it. It's so great. Okay, so let's say I'm going to go look up a property. We're going to look up Housing Authority's building in Grays Lake. So our address there is 33928 North US Highway 45. So as you can see, it populates some options for you. Obviously, we're not going to Brooklyn and Gurney. We're going to go to here. All right, this is going to give you a zoomed in version, so you can zoom out as you like, just to ensure that you're looking at the right property. After you've done this, you've assured that what's what we're looking at. You're going to click on the property itself, and it's going to be highlighted in like a, there we go, in a yellow and a red outline. Now up here where it says PARID, that's the parcel ID, PARID. So this is basically your PIN. We're going to verify, okay, it does say that this is the Housing Authority and this is the address right here. That's the one we're looking for. So we're going to click on this, right? And it's going to populate a brand new window. So this is the cool thing. This is the window that's going to give you all your information about your assessments and your property itself. So please, when you get the time, be a huge nerd. Look through this. There's so much information about your property here. We'll go over it a little bit. So tax year. In Lake County, if it's 2026, we're paying the taxes for 2025. So we're going to draw out the 2025 property tax bill. If you wanted to, you can go back as far as you can here, obviously, but we're going to choose 2025. I know that now is a good time for folks if they're just getting the 2025 bill payable in 2026. Maybe you want to compare them to 2024. This is the way you would do it. You could download these separately. But for the purposes of this, let's just do 2025, okay? 2025. And then we're going to scroll down a little bit here where it says tax bill. Highlight it. And there's so many options here too, by the way. Absolutely go through these at your leisure. Tax bill, and you're going to hit go. Now this is going to take a little bit to populate. Typically it's about 30 seconds. So while we're waiting for it, let's take a look at all the other cool things that you can actually download over here, right? So firstly, you have your exemptions history all the way at the bottom. Now this is a non-taxed property because it's government owned, right? LCHA is part of the government. We don't pay taxes on our property because it's community owned. But if this was a single family residence or a duplex or what have you, your exemptions would be listed here if you get a senior freeze, etc. Okay, well, it cut me off. It populated the property taxes a little sooner. Okay, so this is your printable property tax bill. You can, of course, save it to a Google Drive if you want to. You can download it here as a PDF, or of course you could just immediately print it, right? I am going to use, now that we have this pulled up, I'm going to use one that we have altered that gives you a little better understanding of what a real property tax bill looks like. Because if you roll down on this one, you can see it's untaxed. So we're not going to use this bill. This is just a great example of actually how to download it. But we're going to use, let's clear ourselves out of here. We're going to use this one. I have altered this. So let's go through this. So no personally identifying information, but it does have some actual calculations at the bottom that I stole from somebody. We're not going to say who. Okay, everybody's tax bill looks the same when you download it from the county's website. It's going to have this portion right here, which is your first installment payment, right? It is due on June 4th. That's the first piece right here. You can tear it. I would probably use scissors, but hey, you tear it if you want to. The coupon involves the amount due, the date it's owed. It's going to have an actual PIN number here. This is just an example. And then typically there's going to be a barcode right here, but I removed that barcode because it is personally identifying information for this person. So this is actually not the name of the physical property right here. This is going to be the mailing address. So in Lake County, if you own several properties or somebody pays your property taxes for you, you can have this mailed to a different address, and that's what this is going to go towards. So same thing with the second coupon, mimics it. It just says it's due by the 4th of September as opposed to the 4th of June. The actual property information is going to be right here, right? So underneath the second coupon, here's going to be the meat and potatoes of the entire thing. So you've got your property address here, you've got your PIN number, you've got your tax year, tax code, acres, etc., and then your subdivision. Your legal description is going to be what's found on all of your deeds, your mortgages, things like that. If you have a lien put against the property, a quitclaim deed, what have you, that's where this is involved as well. And then these two columns here are going to be how we calculate the property taxes themselves, okay? So when you print this for yourself, I want you to make, just take special care to really look at these because the numbers coalesce, right? So we're going to look at the left hand of the page here. These are all of our taxing bodies. So for this person, looks like you got College of Lake County, Diamond Lake School District, Mundelein, Fremont, all these things, right? So these are all of your taxing bodies. And these are the rates that they charge annually for 2025, okay? All of these together, that equals this total right here, okay? So this person, God bless him, my God, this person, per year, right? So you've got your tax rates on the side, the current amounts, the total of all those current amounts here, and then this is the one that a lot of folks like to pay attention to, the change from the prior year. So you've got, you know, $33 extra from the College of Lake County, you've got $415 from Diamond Lake School District, all these extras right here. So if you roll down, if you want to bring out your calculator and do the math, the calculations, etc., all of these changes should equal this amount here. All of these current amounts should be equal this amount here. Okay, so how does this matter to this? Well, you'll notice this tax rate here from all these taxing bodies is reflected right here, right? So that's where this information comes from. So when we look at this column, this is more of the impactful calculation, so the dollar amounts, right? So what we're going to be paying annually or per month if you escrow your taxes to your mortgage. So up at the top here, you've got three very important pieces of information. Now this is a single family home from what I understand, and so you've got only the land assessed and the building assessed values, right? So for other pieces of property, they might have outbuildings, they may have development, they may have something else that falls into this line right here, but for the purposes of just a single family home, so we can, you know, get an example, that's what we're looking at. Okay, it all begins with fair market value. The fair market value is set by your township assessor. Your township assessor is going to be attached to your township. So if you are in Avon Township, if you are in Ela, Fremont, Moraine Township, West Deerfield, Shields Township, what have you, there is an elected official, your township assessor. They have to go through certain trainings and present certain criteria to qualify for that office. They are an elected official, and then they produce this amount. So fair market value, in this case, $476,000, which is the average of Lake County's new sales. So land assessed value plus building assessed value, these two here, per Illinois law, have to be no more than 33% of this number. So these two together, 143 plus 15,546 equals this, your equalized value, and this amount here is no more than 33% of this number. Right? We'll get into like the details of how that's worked out, etc. It's Illinois law. There's a great explanation on the county's website for the treasurer and assessor's office. Highly recommend you read it. But let's keep it to the nitty gritty just for time today. 33%. This amount here is 33% of this amount here. Okay. So, like I said, that's your equalized value. If there was additions, which this person does not have, it would be calculated here, which equals a total assessed value. Okay, now this number, when we look at this number, we are looking to subtract the exemptions that you are going to receive. We're going to get into the exemptions soon. It's fascinating how many you can qualify for, et cetera, et cetera. But this person here, like many people in Lake County, they only own one property, so they only get the general homestead exemption. If they got any other exemptions, it would be listed right here. This $8,000 does not come off of the 14. It is subtracted from the total assessed value here to create the taxable valuation. If this person was a disabled veteran, or if they had the senior freeze or anything else like that, it would be added together. So 8,000 plus 8,000 plus 2,000 and subtracted from this number here, the total assessed value. As it is, they only get this one exemption, the $8,000. So their total assessed value is 158. It becomes then 150,927. Okay, now we get the tax rate, right? So here's your tax rate. As you noticed, this tax rate right here is this right here. Again, that tax rate is the addition of all of these together yonder. So we've got taxable valuation times the tax rate. So that's 9.318150%. So if you're doing it on your calculator, it is 159.27 times 9.318150%. It is going to differ between every single household because your taxing bodies are going to differ. So we need to be looking at our own tax bill in order to make this happen, okay? But in this case, this is the example, so we're going to go with it. If you did the math on your calculator, 159.27 times this tax rate does in fact equal this number here. Okay, for a couple of very unfortunate folks in Lake County, they are also privy to a special service area or drainage. There are many places in Antioch right now who do still have the special service area on their tax bill, anywhere between $2,000 and $6,000. And unfortunately, that's one of those things that cannot be reduced with an exemption. So let's say your real estate taxes were this $14,000 amount and you had an additional $6,000 from the special service area. There's nothing you could do to really decrease that special service area. So it would be much higher. It'd be around 20 grand, obviously. That's an appalling amount, but nevertheless. Okay, so if you had a special service area or drainage, you would then add it to your real estate tax to get your total current tax year right there. Excellent. So any kind of cost, etc., any kind of interest from prior years would be listed here and added to your total. And then if you had made any payments this year already, let's say you'd throw something down out of pocket to reduce this, those would be listed here. And in this person's case, their total amount due for the year 2025 is this 14,063.62. And if you roll back up, you'll notice that that is your submission number one, your installment number one, that is, and your installment number two added together. Okay. All right. All right, so now that we've already gone through this, I'm going to speed run this part because we've already looked at it. And you guys are going to get, if you haven't already, you'll get all of these slides so you can review this yourself if you like. Okay, now we're going to go through exemptions because now that we've seen our tax bills and we are blown away by the cost of things, we're going to see where we can reduce our burden a little bit. Okay, so the one that most folks qualify for, if it's just a single, if it's just one residence that you have and it's your primary residence, you live in it all year, is your general homestead exemption. So you only get one of these. So if you own two properties, you can't get a general homestead exemption on two properties. That's it. One and done, right? As we showed before, it reduces the equalized assessed value, not the total taxes, but the equalized assessed value by that $8 grand. So the tax bill we looked at, I believe, was 158, and it reduced to 150. And then you multiply the tax rate, and that's how you get that $14,000 amount tax bill, right? So it has to be your primary residence. You have to own it, obviously. With all of these, you have to own the actual property. So let's just assume that all of these are properties you own. You can only get one, and then most of these exemptions you have to apply for on the Smart File e-portal. Everyone's going to get a link to that portal, but effectively, the portal will. You have to make an account. You have to notify the portal that you are the owner of the property, identify the property, and then it will ask you, do you want to apply for particular exemptions, like the homestead exemption. It takes around 20 minutes to do. LCHA is one of those organizations that are happy to help because it is such an easy process. More than happy to help you guys if you did want to apply for any of these exemptions. Please feel free to click that QR code if you did want our help with this. Happy to help you as a client. But for the record, even though I'm happy to take you guys on as clients, Your townships normally have such incredible staff that can help you through this process, not just the assessor's office, but the actual township supervisor's often have some sort of case manager or some sort of office staff that can walk you through this. So yes, the eFile Smart Portal is where you have to go. The Smart File ePortal is where you have to go to do these exemptions. But if you are maybe a little not tech savvy or you have some obstacles, there are many agencies in the area, including LCHA, including your assessor, that will be able to help you with these. All right, so that's the general homestead exemption. Home improvement exemption, right? So this was a little interesting. So this one is typically when you have something grandiose done to your home, not necessarily like a bathroom renovation, but let's say you put an addition on the household or create an outbuilding or do something incredible to increase the property value. So if you have something like that done, you are risking the chance of increasing your property value, which of course increases your property taxes. So in this case, if you are the principal owner of the property, this is your primary residence, you can go to the township. This is not an e-file, this is a township. And there are a series of documents and there is an application that you have to fill out, which they can provide you and help walk through. But it does defer for 4 years any increase of the assessment of the property. So again, it doesn't freeze your taxes. It pauses, or it defers rather, it defers the increase of the assessment. So the maximum deferment is $25,000. Okay. So disaster reassessment area. If you go to the county's website right now, it does mention that there are certain areas of Lake County that have been designated a disaster area because we've had, of course, recent flooding and tornadoes and things like that. So please, if you believe that you qualify for this, please check it out. This is really interesting. So if you have a property that, let's say, it assessed for $479,000, like that property tax bill we looked at, and then it was badly damaged in a flood, badly damaged in a tornado, one of the many catastrophes that Lake County faces. Clearly, it's not worth that anymore. So it goes from being worth maybe $470,000 to being maybe just worth the property if the physical building has been annihilated, right? So logically, it's not worth the same as it was when it was undamaged. So you could, in this case, reach out to the township. There is one form that you have to fill out, but they can help you with that, which is the P-Tax 245. So effectively, you do still have to be in the disaster area, and you do need to provide proof that these things have happened. The township will help you with which documents you need to provide, but it does allow you to reassess the property. So maybe you're not worth $479 anymore, maybe you're worth $200, whatever that is, right? They do allow you to reassess the property and then change the taxes based on that. Okay, non-homestead exemptions, right? So this is actually kind of what we looked up. So when we looked up LCHA's building, you'll notice that there wasn't any taxes owed on it, right? So it's government property. This is what we're talking about when we look at this. So if, for example, you have a 501c3 and you purchase a piece of land to grow a community garden on it, right? Maybe it was purchased from somebody who developed it or whatever happened to it, but they paid property taxes on it. But you as a 501c3, you as a nonprofit, you want to say, I don't want to pay property taxes on this. We are a nonprofit. We shouldn't have to do that. So this is one of the ways that you can have those property taxes removed from the property in order to exempt yourself, your agency rather, from paying property taxes on an exempt building. So, for example, let's say LCHA acquires a new building next year. Let's say the property taxes last year were $7,000. Now, when LCHA applies for this, it would be $0 if we did all the paperwork correctly, provided all the documentation that was needed, and qualified under the provisions. So this can be done through the e-file portal. Again, I'm positive that if you reached out to your township assessor, they'd be able to help you, or the township supervisor's office. All right, this is a good one. Senior homestead exemptions are an incredible thing that if you have anybody in your life who is over 65 and who does own their property, please, please, please This is such an easy process to do through the portal. The SmartFile e-filing portal provides such an easy way to get this done. Please help your neighbors, your loved ones, your family, your friends. If they are over 65, this effectively doubles your exemptions. If you own your single family, if you own your home and it's your primary residence and you're a senior, that's it. That's all you need. So it is one of the easier things to apply for. The qualifications are minimal, and it doubles the amount from just a homestead exemption. So again, the homestead exemption is $8,000, the senior exemption is $8,000. Please, 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 if you know somebody, have them walk through this. The documentation requirements are minimal. You'll probably have to provide proof of age, proof of residency, and then, of course, the deed to the property to show that this is the person who owns it, all of which, if you are looking for the deed, you can, of course, download from the Lake County Recorder of Deeds website, very easy to access. Type in Illinois Recorder of Deeds or Lake County Illinois Recorder of Deeds. It'll pop up a website. The new website's very user-friendly. You can download the deed if you don't already have it. But again, if you do want help with this, your township is a great place to go. LCHA, Housing Counseling, great place to go. Happily help you with this. Okay, this one is the low-income senior assessment freeze is a little bit more complicated. So the senior exemptions are in order, least to most complicated. We're in the middle right here, and the most complicated is going to be the one after this. But effectively, the senior freeze doesn't freeze the taxes. So you know how we went through the property tax bill, and we had the assessed value, then the tax rate. You had to multiply that to get the actual property taxes. So this doesn't freeze the property taxes, it freezes that assessed value. And that's important because all of us who are here downloading our property tax bills, we've known last year maybe it wasn't $479, maybe it was $422 or $429. That assessed value can increase year to year, especially when we're in a market like this. So for seniors, what they can do is apply for this exemption, and you have to do it every year. You cannot just put it aside. It has to be done every year. And you do have to prove income for the household, everybody in the household, right? All adults with income in the household, no matter the income. So it freezes the assessed value for the year. And if the assessed value, let's say it's $479 today, the assessed value decreases next year to like $429, they choose the lower of the two. So increase or decrease this year, the lower of those two assessed values. The benefit of this is that when the markets rise, when home prices, when the fair market value skyrockets, a person with the senior freeze is protected because that assessed value stays low. Okay. And then obviously you do have to be a senior, you have to own the property, you have to apply every year, and then this is the biggie. You have to own and occupy the home as the principal residence as of January 1st, 2025, if we're looking at 2025's taxes, right? So if you purchased on January 3rd, it's not the same, so you don't qualify for it. So if you occupied the property January 1st of the year that you're applying for taxes, you're good to go. Okay. And then you can do this through the smartphone portal as well. Okay, this is the most complicated, but also interesting. So this is the one that creates a little bit of confusion. So the tax deferral, you have to think about it as a loan, right? So there is an actual lien that's put on the property. A lien, of course, is a document that says if something is not paid back, we can seize the property. Your mortgage is a lien against the property. A mechanic could put a lien against the property. A utility company could put a lien against the property that basically says, upon sales of the property, you have to pay us back first, right? So think of this as a lien against the property. It is a loan. It is not free money. It is a loan. But what it does is it allows you to defer 80% of your equity in the property up to $7,500, right? There are some income qualifications. Obviously, it's a seniors program, so it's 65 and older. And then there is a deadline that unfortunately has passed for this year. So March 1st, 2026 is when you had to apply for the 2025 tax year. It's already passed. So if you want to do this for next year, I highly recommend either meeting with the counselor, meeting with your assessor to really look at the nitty-gritty of this, because it does have to be paid back. And just like your mortgage or a HECM loan or something like that, you do have to provide evidence that you have property tax insurance on this, and you have to provide that information to the treasurer's office. So yes, there are huge benefits of this. Your estate will have to remedy these tax deferments. They'll have to pay it back. And there is a, I believe it's 3% interest rate put on this. So it's not free money. It is a interest-bearing lien on the property that your estate will have to pay back when you pass. But to a point, if you're in a position where you know that that will be fine, or maybe you don't necessarily have heirs and you're comfortable deferring and having your estate pay it back to the treasurer's office, then yeah, it's a great way to defer a significant amount of your property taxes. Okay, disabilities, homestead exemption with the persons with disabilities. This is very similar to the other ones. So imagine it's like the homestead exemption for persons with disabilities, only it's a lower exemption. It's only $2,000. Same thing. You have to be the person who owns the property. You have to have it as your principal residence. January 1st of the tax year. That's kind of a universal. And then as far as the disability goes, the e-file portal is a great way to apply for it, but to a point I've seen it work a little bit better when a person is able to go to their assessor's office at the townships, because they'll be able to navigate and help you work through the documentation requirements. Because proving a disability is sometimes a challenge, right? So there are documents that they will accept that are fast and strong, that no questions asked, right? So here's a couple of them. Obviously, your Social Security benefits, disability benefits, your veterans disability benefits, railroad disability benefits, the PTAX 343A, that is something that you and your physician have to fill out, and the physician signs it and faxes it back to I believe the assessor's office, or they might be able to provide it to you. Let's go with that one. But effectively, you can provide these fast and strong methods of proving your disability. My recommendation is to speak to the township office, because they have experts in this and they know what will and will not be accepted. If it's a combination of a couple of things, let's say your proof of Social Security disability benefits letter is a little must or fussed or something like that, they'll be able to help you walk through getting a replacement, etc. Again, if you have questions, look to an expert. The township assessors are wonderful out here. The supervisors are fantastic as well. Okay, the veterans exemption for disabled veterans. So this one is a little bit different. There is 2 disabled veterans exemptions. Let's start with this one because it's a little bit easier to understand than the other. So this one is monitored and administered by the Illinois Department of Veterans Affairs. So they, in conjunction with the Treasurer's Office, coordinate, right? But you're going to start out with your VA office, right? So when we say it's a veterans exemption, obviously you have to be part of the military. So disability, the federal government has authorized payment for the purchase or construction of housing, which is special adaptations to meet the need of your disability. That's a very long sentence, and I did steal it directly from the VA. So what does that mean? That means for this exemption specifically, the VA has a program through which you can get funding to alter the building you're going to be living in, or to purchase a disabled accommodating building, whether it's a single family home, a condo, what have you, right? So that is the purpose of this exemption. That's why the VA also has to be involved, because there are certain payments that have to be proven in order for you to get this particular exemption. Now the good thing is it reduces your equalized value by a hefty amount, by that $100,000. So the other good thing is, if you are a veteran and you pass away and you leave a spouse that is not yet remarried, that spouse can still take that exemption and then move that exemption to, no, excuse me, that's not true. That's for a different one. This is, they can take this exemption off of this property, not if they move. That's a different one. We'll get to that. Okay, returning veterans exemption. So very similar. If the veteran returns, when the veteran returns, let's say that, when the veteran returns, the 2 years following their return consecutive. So let's say it's 2024 and 2025, right? Those are the years they can qualify. Each of those years they can get an assessment exemption of $5,000. So it lowers the value of that equalized assessment. Again, not the tax burden, but that equalized assessment. Okay, so $5,000 as well. So obviously any kind of military exemption, you have to have evidence that you've served in the military, so Armed Forces, National Guard, Reserves. This is a biggie. Have returned from active duty in an armed conflict involving the armed forces of the U.S. So there are certain positions within the military that never see conflict. We have had several clients that say, okay, this is where I worked, this is what I did. Unfortunately, this is the big part where they did not qualify for this particular exemption because they did not return from active duty in an armed conflict involving the armed forces of the U.S., right? And then, of course, there's always the requirement that you have had this as your principal residence since January 1st. Okay. Here's the standard exemptions for veterans with disabilities. I know it says standard exemption, but this one's a little bit more complicated than any of them to calculate because it relies on the percentage of disability that the VA designates, right? So this is not a designation that your township supervisor makes, that your assessor makes. This is the medical designation that the VA makes. Your assessor's not going to have anything to do with that. So 30% to 70% or higher, meaning you could, of course, have a 100% disability designation from the VA. It has to be a service-connected disability. The VA will take care of that. And then obviously the scope is quite serious. So if you're at the 30%, you get $2,500. There's a middle ground that's $5,000 exemption, and then 100% disabled gets that $250,000 reduction in the property's equalized assessed value. So you could theoretically have a $0 tax bill because your assessed value is $0 after this exemption, right? And then, of course, this is a military exemption, so you have to be a person in the military, own and occupy the home in Lake County as your primary residence, served in the Armed Forces, National Guard, and Reserves. This is the one, please forgive me, I messed up earlier. This is the one where the spouse of a deceased service member who was disabled did qualify for this exemption. This is the one that that spouse can carry over into a new residence. The difference is that it cannot be, that spouse cannot remarry if they are to get this exemption. From what I understand, that's kind of standard for military widows or widowers. So the exemption can transfer to a new property if that person, the widow or widower, is unmarried. And then, of course, this can be done through the portal or at your township assessors. Okay, let's move into how we appeal. This is the big one, right? So let's say you've gone over your tax bill, you've established that you have all the exemptions that you qualify for, and you're still looking at your tax bill and you're like, well, this is absolute hokum. It couldn't possibly be this much, right? So let's remember that there's a couple things on your property tax bill that by the time you get your tax bill, you can't impact. So for example, the tax rate. By the time you get the property tax bill, the rate has been set by those governing tax bodies, right? So yes, you do have an impact on those. You could go to your local school board meetings if there is a tax referendum. You could talk to your all the taxing bodies, the pension board. These are all things you can vote on. Of course, that requires so much involvement and absolutely knowing when these votes are going to happen. Theoretically, they should be as transparent as anything else. So your school board should be able to tell you when referendum are going to happen regarding any increase in the tax rate for your particular school district. Same with the pensions, same with CLC if you fall under that category, et cetera, et cetera, et cetera. So yes, you do, and you should absolutely have a voice in how the tax rate is established. But if we're at the point right now on May 4th, 2026, we have our tax bills, those tax rates are firm and fast. So how do we appeal? Okay, so the first step for this is to contact your assessors. Now, you should be receiving when the assessment has been completed. Typically, it's a blue piece of paper in the mail that says, hey, this is your assessment for this year. So the tax bill we looked at. So we've assessed you at $479,000 fair market value. That is established by your individual township assessor. So when you receive that in the mail, the first step is to call the township assessor and say, okay, I don't know where the heck you got this, or what have you, right? So you're going to say it nicely, but you're going to say, I'd like to appeal, or I'd like some information on how you got to this number. So typically they're busy right after you get those blue forms because they're sent out, and every single person who's been assessed in that year is going to say, I don't like this, so I'd like an explanation. That doesn't mean you shouldn't pursue it. So first thing, call your assessor to discuss your concerns. If they have a rationale behind why your fair market value was assessed at what it was, they should be able to tell you that information. If you do not get any results, your next step is to appeal formally through that same e-file portal, right? So my advice to everybody is to get an account with the e-file portal as soon as possible, because at a minimum, you should be interacting with it once per year. There is no reason why you can't appeal your taxes once per year. And we'll get into the reasons you are allowed to appeal your taxes, because it's not infinite. They are limited to what you are allowed to appeal. But if you look over your taxes and you don't believe that things are accurate, you absolutely should appeal it. And if that happens every year, you should have an ongoing account with the e-file portal. So there are several counties that do not operate using the e-file portal. Those are Cuba, Ela, Grant, Libertyville, Shields, and Vernon townships. However, if you go to the e-file portal, open it up after you make the account, it actually will say to you, hey, are you in any of these townships? And you go, oh yes, I'm in one of these townships. It'll actually send you to that portal for that township. So it's a good place to start, no matter what township you're in, the SmartFile e-file portal. Okay, so when you get on the e-file portal, they're going to ask you for a couple of things. They're going to ask you for the PIN, which is going to be on your property tax bill. They're going to ask you for who you are, your contact information, your email address, your phone number. Are you the owner of the property or the agent of the property? If I was helping somebody, I would be the agent. I would give my information as well as the owner of the property. It's also wise to have something that proves that you own the property, like the property deed. Again, we're happy to help you download those. But we will send out a link to how to download those for yourself. Of course, you could always visit the courthouse and get your deed from the Recorder of Deeds office, which is at the courthouse in Waukegan. If you want to make that trip, it's a lovely area. So you should have to provide that as well, basic information. The other thing before you file is to decide how you'd like to appeal. There are specific venues you can go through. The easiest one is via letter. And it's not really letter, it's the e-file portal. But that's what we're going to call it. We're going to call it via letter. That's the easiest. You basically choose your reason for e-filing and appealing your property taxes. We'll go over what are appropriate reasons to appeal. But then you find comparables in the area that back up that documentation, or your opinion on why this is not accurate. You get that documentation prior to that, and you include it in the appeal itself. There's a way to upload those, and to a point, there's a way to create those comparables within the e-file portal when you are appealing your taxes. If you choose phone, if you choose in person, if you choose Zoom, you will be interacting with the appeals board. If you choose letter, which again is the easiest, that's the portal, they will hold a hearing. They will take all of your documentation. They will look at what you're saying, what you're making your case, and then they will ask the township assessor to say, okay, friend, you make your case now. So you present your materials, they present their materials, the board looks at it, and they say, okay, we think that, the homeowner is correct, or we think that the property assessor is correct. And sometimes they think, hey, actually, neither are correct, and it should be even more. The assessed value should be more than this is assessed on the property. So there's a very rare possibility that your taxes could increase after you appeal. Just want to make sure you keep that in mind. Please appeal though. Always submit supportive documents, because yes, you can stop and start and pause and continue your appeals process, but it's always good to have the preparation done prior, so you can just boop, 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 upload it and hit the hay. The other thing is, you only have 30 days after you get that letter that your property has been assessed to complete the assessment. Now, last year, this was delayed and delayed and delayed for certain townships because those taxing bodies that we went over, the left side of the tax bill, all those taxing bodies, they took a longer time than normal to get the rates to the assessor's offices, right? So, depending on when your assessments are launched, are published, you have 30 days from that point to put the appeal in. Typically, this isn't around July, August, September. It could take longer than that, depending on if those taxing bodies don't get back to the assessor. So the assessor's going to do their job. They're going to assess the property. The taxing bodies are going to do their job. They're going to get their percentages and what they want to tax this year. It all comes together, and then eventually in May, often the first week of May, we get our actual property tax bills launched on the site. Okay. Reasons to appeal. There are finite reasons that you can appeal your property taxes. And unfortunately, I'm broke and this is too much is not a good reason. It's not an accepted reason. It's a fine reason. It's a really good reason. People, it's hard out there right now, but it isn't one of the reasons that they'll accept. So let's go over these things. Factual error is the biggest one that we see. What is factual error? Saying that a property is 5 bedrooms instead of 4. Saying that a property has 6 bathrooms instead of 2. Saying that the square footage is greater than it is. So anything that really makes the house more taxable than it legitimately is, that's a factual error. And in that case, you can actually call your assessor and say, I'm happy to have you walk through my house and notice that we only have 2 bathrooms. I don't know where you got these extra 4 bathrooms for, but I promise you that's not the case. A lot of the times, this will happen when a property is newly built. So for example, a property is built at 105 Main Street, right? And it'll be advertised to the county as being built with 4 bedrooms, but the property owner buys it and says, no, I don't want 4 bedrooms. I only want 3 bedrooms and I want the bedrooms to be bigger. Certainly the square footage is the same, but the property bedrooms are not, right? So there's certain factual things that go into it. Likewise, if you put an addition on your home, maybe you only put a 750 square foot addition, but they show you as having a 1200 square foot addition, that is a significant difference, a factual error that you should contest. Okay, remember earlier how we talked about the property and the building values being 1/3, 33% per state law of that fair market value, right? Those are the 2 things we're talking about next. The assessment is greater than 1/3 of the subject recent sales price. This is important for people who just bought the house, right? So let's say the property has been assessed at $479, like we saw in that property tax bill, but you just bought it for $300, right? So we're not sure where we got that assessed value, but we know what you paid for it. It's still being assessed at $479. The property values are still 33% of that fair market value, but you know the fair market value because you just bought it for $300. That is a viable reason to appeal your taxes, because to a point, the fair market value just happened and you can prove it because you just bought it. Okay, the assessment is greater than 1/3 of the subject property's market value. So this one's a little harder to prove. So let's say you've lived in the property for 9 years. Your property, like we saw in the tax bill, is assessed at $479. You believe that the fair market value is $300. Okay, you think it's $300, but you're being assessed at $479. Typically in a normal sales market, in a normal real estate market, we could look at comps from the areas. Okay, 2 houses down just sold like this, 6 houses down just sold like this. With less and less sales, it's very difficult to make those comps and to make the argument that your house is really not worth $479, it's worth $300. So that's going to take a lot more legwork to get accomplished, right? So you're going to have to pull comparables. You really are going to have to say, I have a colonial style home. It's got 3 bedrooms, 2 baths, 7,500 square foot lot, and a 2,000 square foot home. It's got little, and you're going to go through all your details about the home. You're going to find that exact home within the same neighborhood, et cetera, and they only sold for 300. That is a great reason to appeal. However, it's more difficult in this kind of market where it's probably unlikely that you're going to find that comparable within the past 6 months and be able to prove it. People who live in newly developing neighborhoods, they have a better chance of this because houses are popping up, and they're basically all the same design with the same specs. That they, to a point, that's the benefit of having a neighborhood with very similar homes, is that this is easier to prove. But still worth it. And then next one is the assessment of the subject property is higher than that of comparable properties, right? So, for example, if in your neighborhood, maybe your houses are not identical, but they're, effectively the same square footage, effectively the same details on the page, like on paper, they look identical, and theirs happen to be assessed at $100,000 less than you. That's a reason to say, hey, these are not the same properties. Mine is not suddenly worth $479, while yours is worth $379, right? So in that situation, same thing. We're going to have to find comparables. We're going to have to find, what's happening in the neighborhood. To a point, that's also why we should be nosy about what our neighbors' homes are selling for, because it means that we can actually come to our assessor's office if it's lower than what's been assessed on your property, and say, hey, this one just sold for $200,000 less than I'm assessed for. So, keep your eyes out, be nosy. And then, of course, this is kind of a catch-all, matters of law. I've never seen a person appeal based on matters of law, and if I'm really honest with you, I'm not entirely sure what that means. I don't know if that means matters of law is that it's not a house, like where I'm being charged for a house that doesn't exist, or perhaps I'm appealing something because I don't own the property. But I would love to know if anybody has ever appealed and won based on matters of law. I've never seen one in 10 years doing this job, but I'm sure it exists. All right, last topic, and then we'll take some questions. What happens if I don't pay my property taxes? We are going to go through two scenarios. We're going to go through the first one, which is if you do have a mortgage, and then we're going to go if you don't have a mortgage. So, if you do have a mortgage, and you are one of the lucky few who does not escrow your property taxes, your escrow is a monthly breakdown of your property taxes and your homeowner's insurance. So escrow can be your property taxes divided by 12 plus your homeowner's insurance divided by 12. It is very rarely divided by 12. Your lender is allowed to divide your property taxes by 10 per federal law instead of 12. So they can charge you more than the amortized over 12 months cost of your property taxes. Now, they're not truly charging you. It is paid on your behalf. What they are doing with an escrow account is saying, okay, this year, in 6 months, we need to pay $7,400 to cover that $14,000 annual cost. Another 6 months after that, we have to pay another $7,400 to cover that $14,000 amount, right? So we need, by this date, to have enough to cover the 6 months. You have nothing in your account, so we need to cover this and then keep padding it for the next year. So theoretically, if you do not pay your property taxes and you have a mortgage, if you are late by a few days, it is unlikely that the tax assessor's office, the treasurer, is going to contact your lender and say, pay us. However, your lender keeps a close eye on the property taxes, and they will be notified if you do not pay, especially by the second installment. So the lender has the right, if you have a mortgage, even if you pay out of pocket for your property taxes, if you are either delinquent on your mortgage payments, or if they are notified that you have not paid your property taxes, they can then pay your property taxes for you, and then they can open an escrow account for you that you are going to be required to pay in. So no longer will you be allowed to pay out of pocket for your property taxes. you will likely have to escrow your property taxes and your homeowner's insurance, which can be, again, quite expensive, especially to start out with, because you don't have that padding on your account as if you would have had if you had been paying into your mortgage escrow all along. So typically, if we are a person who has a mortgage and who does not pay their property taxes by the second installment, you will have to either create a lump sum escrow, or your lender will do what's called an escrow analysis and find what's called an escrow shortage. And typically that escrow shortage, you will have to then amortize over 12 months, in addition to your property taxes over 12 months. So sometimes we end up paying almost 2 years at one time for our escrow payments if we've never started the account, right? So if you've never had an escrow account before with your mortgage. So weirdly enough, it can be more hazardous financially if we have a mortgage and we don't pay our property taxes out of pocket, if we're late on them, than if we had if we didn't have a mortgage and didn't pay our property taxes. If you didn't have a mortgage, we'll go over that next, but basically if you do have a mortgage and you pay out of your pocket for your property taxes and you fail to pay them by the second installment, there are true, real monthly cost consequences for not doing that, because your lender is allowed to then take over the payment of your property taxes, and they will charge you an arm and a leg for it, because they're allowed to pad your escrow account so they are guaranteed to be able to have the funds for the next couple of property tax payments. So please, if you have a mortgage and you do pay out of pocket for your property taxes, please pay them. Okay. This seems more complicated, but I promise you it's a little less tragic. If you don't have a mortgage and you pay your property taxes out of pocket, what happens if you don't? Okay. You've paid your house off in full. You're supposed to pay your property taxes every 6 months. You are late. The first payment, the first installment is due June 4th. So June 5th, you start accruing 1.5% interest rate on the property taxes that you owed on that first installment. If you get to that second installment and you don't pay, typically what ends up happening is, obviously you're still accruing a bunch of interest. Absolutely, you're still accruing a bunch of interest on the property, but on the property taxes, rather. But by the second assessment, you're going to get a notice that says, okay, well, Lake County, we are universally firm on this. We send you to tax sale. It's typically November, December that you get the notice, and then they send you to tax sale. You have an opportunity, of course, to pay the property taxes directly to the county with that penalty, the 1.5 every month. But let's say it is December. They've notified you that you're going to tax sale. It's an interesting concept. So they bring everybody together, and there are people who all they do is buy property tax debt. So let's think of this as a debt buyer rather than a property tax deed buyer. The idea of buying property tax debt is a couple things. One, they make a little bit of money, but two, the property tax buyer is really in it for the long haul, because if you don't pay your property taxes, eventually they can seize the property. It's not immediate, so please don't panic. But the concept is they're in it for the long potential investment, and if they end up, if you end up redeeming your property taxes, they make a little money off of it as well. But okay, so let's say November, December, you have not paid first installment or second installment of your property taxes. It does go to sale, and the county has an interesting approach where they say, okay, we are going to start out. We're going to start out at, I believe, at 2.5%, and whoever bids the lowest is the person that wins the auction. So so Liz, Joe, Steve, and Janine are battling against each other. Whoever gets to zero or closest to zero, they win, right? And that's the percentage they're going to charge the homeowner on top of the taxes. So let's say Janine wins, she's zero, that's her bid, right? There is, however, court costs, there's all sorts of other fees that go into this, so it's not like you're just paying your standard property taxes period and you get away scot-free, right? So there's additional costs beyond the 1.5% that you're accruing every month on top of this. Now, if you don't have a buyer for the property, it's 18% and the property taxes are owed to the county. So let's keep that in mind. It's weird to say, but it's almost better for your taxes to be purchased by a private buyer than kept at the county, because the interest is night and day. 18% versus 0%, obviously 0%. Okay, so if let's say Janine now owns your taxes, you now have between 2.5 and 3 years. That's called the redemption period. You're still accruing interest. Hopefully you're still paying other property taxes, but those can be added on as well. Anyway, so you have 2.5 to 3 years to redeem. You could go one of two ways. Typically people pay it off at the county level. So they go to the treasurer's office and they say, I'd like to redeem my property taxes. They look at the redemption, which again, you could pull from the property tax website. They redeem the property taxes and you're all super duper clear. Everything's good to go. If you don't redeem your taxes, you will get other notifications saying, hey, here's your redemption period, here's your redemption date, here's your redemption date. It comes every 6 months from the county, in addition to the tax buyer notifying you as well. Let's say you've passed 2.5 years, you've petitioned the tax buyer for an extra 6 months, they give it to you, you still don't pay it. They are then now able to petition the court and the county for a tax deed and then begin the process of eviction. So in that scenario, it is ideal that if you are going to be delinquent on your taxes, to avoid just absolute fees on top of fees on top of fees, pay it off as soon as possible. Don't dilly-dally. If you get to the point where your taxes are sold, yes, you do have 2.5 years, but fees are accruing, interest is accruing, etc. If you cannot pay it off right away, yes, you have 2.5 years to redeem. Yes, you will have to pay an arm and a leg and fees and interest and things like that, but it's not like the sheriff is going to show up and take your property, kick you out, and give it to some guy. That's not the situation. There is a time frame in which you operate, in which the courts operate, because again, after they seize the property in a deed, in a tax deed, they still have to have you evicted and then take the property physically from you. So that takes time as well. My point though is you have so much time in order to redeem, do your best to actually redeem it, or else you will lose a property that you don't have a mortgage on. Okay, so that's what happens if you don't pay. Does anybody have any questions? Let's take a look. Let me see the chat. I haven't even looked at the chat. Okay, no worries. Let's see here. Okay, if you want to, if you have any questions, you are welcome to unmute yourself. I just clicked the button that allows you to do that. Does anybody have any questions about calculations or who to talk to or the process, anything like that?
Hello, Liz. I have a question.
Hi. Sure.
I paid off my house and my property tax bill was sent to my previous address. All of a sudden, my neighbor says there's a notice in the paper about your house being, I don't know, must be the tax sale.
Yeah.
Is there ability to appeal if the county or whoever's sending the tax bill is sending it to the wrong address? You'd think they'd send it to the address where they're charging property tax. But in my case, they didn't.
Okay. That's a fabulous question. First thing first, let's address the tax sale. Obviously, we have so much time to get things right. At this point, if they haven't sold you at taxes yet, at the tax sale yet, you still have time to redeem in full, and all you'll pay is that 1.5. So please, 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 if that's your situation, please reach out to the township, to the treasurer's office and get that paid so you can maintain that property. Again, you have all the redemption time you have, so 2.5 years from the time that they sold the property, please resolve it so you can maintain that property. Now, to your greater point, The county is pretty forward when it comes to responsibility about who is responsible for where the bills are sent. Okay, so when we looked at the property tax bill, we said, okay, this is the address where it's sent, and down here in littler writing is the actual address of the property. Because Lake County provides us the portal and several outlets in which to change the mailing address, it is their opinion that, or is their stance, not opinion, their stance, that we as taxpayers are responsible for where the bill goes. I won't lie to you, I actually changed my mailing address this morning because I looked at my property taxes in preparation for this call and I noticed that they were incorrect. So the filing tax portal it is worth getting the account, logging in, and changing things if they're not going to the right address for two reasons. One, especially if you have a brand new building that was just built with a developer or something like that, you're right, the tax bills could be going to the developer instead of you. Or in my case, for some reason, there was a apartment number that doesn't exist. There's no apartments in my house. So that might confuse the delivering of my property tax bills. But it is the county stance that we are responsible for altering, updating, and adjusting the mailing address for the property taxes, and ultimately we're responsible for the payment of the property taxes as well. I still think it's worth looking into. I still think it's worth, speaking to your assessor and saying, hey, this wasn't going to the right place. What can we do about this? And I especially think it's worth speaking to the treasurer, and especially if you're in that period of time where you're just being taxed at 1.5 rate, to say to them, may I have some leeway on this? Could you give me some forgiveness? They may say no, but it's still worth asking. Could you maybe claw back this 1.5? Because it wasn't that I didn't want to pay it, it was that it went to the wrong address or whatnot. But the treasurer would be the place to ask for that. Absolutely, that would be also the place to pay the property taxes if they haven't been sold to somebody. And then, of course, the treasurer would be the person to talk to if they have been sold. Does that answer your question?
Yeah, in my case, uh, I eventually got the bill and paid the bill
Okay.
with quite a bit of interest or
Oh
penalty
my
or
goodness, I'm
whatever.
so sorry.
And it
Yeah.
was because I owned my house outright and had an escrow account when I had a mortgage, and then that went away. And I thought, okay, they're going to send a bill one of these days, and never got it.
We just had a client who paid off her mortgage, and one of the first things I thought was, oh God, let's log into this portal and make sure it goes to her house because she'd had such a time with this mortgage getting it closed. So I would advise everybody to log into the portal to ensure that it's going to the right place, ensuring that it's going to your home or wherever you'd like it. If you have a PO box, wherever it is. Somebody, Amy in the chat had said that they should talk to the attorney who did the closing, and that's a valuable point. We have seen a couple of things regarding purchasing, right? So two things really, three things really. One, yes, absolutely get the name changed. We've seen folks who have gone through the formal process of closing the home and had what they thought to be wonderful representation, and then that property tax bill was still under somebody's name, et cetera, et cetera. But then two, we've had folks that nobody ever filed for homestead for them, and they didn't know to do it for themselves, or they had folks that, three, that no one ever told them that they wouldn't be receiving the same exemptions that the person who sold them the house did. So, we actually had a coworker who purchased a home from a fully disabled veteran. Nobody on her team told her, you're not a disabled veteran, so you're not going to be receiving a super low tax bill. But they qualified her for the mortgage based on, PITIA, principal, interest, taxes, insurances, and homeowners association. So to a point, it kind of messes with your monthly payment if all of a sudden you have to be paying much more into an escrow account than if you would had you received the incredible exemptions that a senior or a disabled veteran receives, etc. So my advice to anybody purchasing a home who's already purchased the home, whatever it is, keep your eye on your property taxes or the potential property taxes for the home you're looking to purchase, because you want to make sure that you accommodate for a brand new home that's never had property taxes before, a home that had a exemption for a disabled veteran or a senior freeze or all these other things, and then make sure that you are aligned and prepared to pay the property taxes that are adjusted to your situation, and also to a point, make sure that it's assessed properly, because if you're buying this property at 500,000 and the last time it was assessed it's at 300, your bill's going to jump. So um, yeah. Anyway, anybody else? Right. I think this is such a valuable conversation to have. I'm so thankful that you all joined me today. We are going to be publishing this to our YouTube page, so if you know anybody who might benefit from this and you're like, hey, I went to this thing, obviously you're welcome to show them the video. We're going to have that up between now and Friday. Sometimes it takes me a little bit to edit out all the nonsense. Um, And then everybody should have gotten a link to where you can download your property taxes as well as a guide to reviewing it. Everybody else should have gotten the slides. But if you know anybody who wants those slides or wasn't able to join us today or whatever, please reach out. I'm happy to provide these. These are all public information, so there's no info that shouldn't be shared. And then if everybody, if you want to, you're welcome to join us at our future workshops. It's all on our website. I think the next one is next Friday, and it would be wonderful to see you. I hope that if you do have a suggestion for a workshop that we can host for you, your community, your faith-based organization, your book club, whatever it is, we are happy to take suggestions on workshops as well as workshop times. I know this is at noon during the weekday. Not everybody else can join us for that time period. So if you do have suggestions for topics or times or locations or anything like that, please let me know. You're welcome to reach out. Okay, well, thank you again for joining us, and I hope to see you at the next one. Have a wonderful day.